So in my last video, I told you guys to reach out to me on social media if you wanted to do a completely free one-on-one with me where we can go over any questions that you may have about supply and demand trading. Completely different methodology if you wanted to, just general trading questions, trade reviews, anything, so I could help point you in the right direction. I do these calls all the time with people in the private group, but for those that who are not, that's why I reached out in the previous video saying, hey, let me know on social media if you would like to. So I sat down with Michael one-on-one. Now, unfortunately, he could not make it to the meeting, or he did, but his microphone was absolutely horrible and his Wi-Fi was horrible. So I said, hey, I'm not going to sit through this for 1 hour. Just send me your questions and your trade reviews and I can do it here. I'm going to upload it as a YouTube video. If you guys would like to do this with me, you can reach out to me on social media at Moneyball Austin, Twitter, Facebook, Instagram. Reach out to me and I will sit down with you guys, or email, of course, and I will sit down with you and we can do this meeting, which will be recorded and be a YouTube video if I like it. So the first question he asked is, how many candlesticks do you like to see at your base area of your confirmation setup? Now, typically, I don't like to see more than 6 candlesticks at my base. Let's think about it, guys. If he is trading supply and demand, which it looks like he is, typically we are looking for imbalances. If there is a strong imbalance between buyers and sellers in the market, do you think prices will go sideways for a long time, or it will go in a up direction or a down direction within a really quick time period? If there is a serious imbalance between buyers and sellers, will it go up quickly or will it drag on going sideways and then have a strong imbalance? No, it's going to spend a very little amount of time going sideways and then you're going to see a strong imbalance, right? The analogy I like to give in the group is, say, for example, you put a team like Barcelona versus a Division 3 soccer team. Okay? Barcelona versus a Division 3 soccer team, the skill gap is massive, right? So at the start of the game, it's going to be 0-0, but by the first 10 minutes, it's probably going to be 5-0 Barcelona. There's a massive skill difference, right? There is an imbalance of skill. Versus if you replace that team, that Division 3 team with, say, Real Madrid. So you got Barcelona versus Real Madrid. Well, those are equal playing fields. Those are good players going against other very good players, the best in the world. So at the end of the game, you're going to have a score 1-0, 2-1, 3-1, that type of action versus the Division 3 team, you're going to have like a 20-0 halftime. You know, by halftime it's going to be 20-0, and then going into the second half, they're going to have all their second and third strings playing, right? There is a serious imbalance. That's what we want to be betting on. We want to be betting on these strong imbalances, right? So less time is better. I like to have it 1 to 6 candlesticks max. So the next question he asked is, how far does market have to go before you cancel your confirmation setup order? Great question. Well, let's pop over to the Discord because I answer this all the time in the meetings and in the Discord, so I'm just going to show you here. Now, this is a question that eBarrow asked regarding price spending too long without retesting a level for entry. How long does each time frame need to before we throw it out? Basically the same question, you know. And I said, classic question. In fact, it's one of the most famous questions asked here in the group. Too bad you didn't ask this in the meeting. Yeah, So I go on to say it really just depends on the type of time frame the trader is using. In my opinion, which has been tested here in the group by myself and by many other traders, is that it's better to have price to come back sooner rather than later, right? This really depends on the entry time frame the trader is using. If the trader is using the 1 to 5 minute, I don't recommend taking a trade that takes longer than 3 to 5 hours to come back into the zone. Think about it, guys. People that are making these 1 to 5 minute zones, buying and selling, these are small, short-term traders, right? So usually you're going to be trading with the same type of traders that are buying and selling in those areas previously. So that's why I want to make sure that price comes back within a short period of time. If price takes 24 hours to come back into a 1 minute zone, those those traders have a completely different agenda the next day. They could be looking at completely different markets, completely different trade setup, right? Even if it's more than 3-4 hours, they could be out to lunch. They could be done for the day. I mean, I don't sit here on the computer longer than 3-4 hours when I'm trading. Maximum three or four is usually what I trade. So, you know, I don't like to take these trades that take too long. And then right here, I do have a list for you guys below that you guys can just use as a rough guide for you. I'm not saying this is permanent. I'm just saying it's a good rough estimate. So if you're using the 1 minute to 5 minute, 3 to 5 minutes, if you plan on using the 15 minute, 24 hours max, 30 minute to 1 hour, 24 to 48 hours, if you're using the 4 hour as your entry 1 week, and daily, no more than 30 days. That's just a rough guide. It's what I like. It's what I've had better results with. I've reviewed all my trades and I've came up with this is kind of what's worked for me. Okay. Recommend going off and doing your own research because this is very simple for you to do. Right. Just figuring out, okay, if I'm taking a 1 hour zone, should I really be taking this 1 hour zone that was created a week ago? Right. So let's go back into the questions. Number 3 is, have you ever considered using MyFX book as sentiment to take a trade? Yes, I think it is something that people can use to use as correlation with their trades. You're going to be trading the opposite. The whole point of the sentiment is to be aware of where the retail public money is. You know what I mean? If 90% of the public money is long, then typically the market is going down, right? Retail traders lose money. So it's a nice little indicator to know what side the public money is on. And if 90% of the public money is long on say Euro CAD, then it's most likely just trending down, right? Like heavily. I actually did a video on this, how to read sentiment. So I will pop that on the screen. I recommend checking that out. That is in my tips playlist. I think it's a nice little correlation to make your trading better. I don't think it's necessary, but I've also used it to avoid certain trades. I'm like, oh, I really like this trade. But then I go and look at it, I'm like, well, it's like 98% are long. Should I really be getting long this thing? It's counter trend. Counter trend doesn't work as well as my sideways or trending markets. So it's probably a trade that I should stay away from, right? So yeah, I think it's good. If you can handle it, use it, document it in your trades, see how you do, right? He goes on to say, number 4, how do you catch up or tag along a trade that is falling hard like crazy? How do you catch up or tag along a trade? I I, I don't chase the market. If it's just dropping, I don't push sell. No, I wait for my setup. This is why I recommend people becoming a one trick pony. Is because you focus on one system, one setup, and you just trade that exact setup every single time. You stop chasing the market. You stop looking at what all these other traders are doing. Like every good trader that I know, they don't watch 20 different YouTubers. They have one, maybe two, right? And then the rest are like economics people that they listen to. Me, I don't. I listen to maybe one trader, right? I just want to get his view for 10 seconds, and then I hop away. Like I'm not interested in learning how Bilbo Baggins trades the VWAP indicator. Like it's cool. It's interesting stuff. I can definitely learn some stuff, but I'm not going to go off and use it, right? So just be careful. This is why I tell people focus in on one setup, becoming a one trick pony. I've seen you draw zones on daily and go down to the 1 minute for trades when it should be the 1 hour should create it. I put that on people and I recommend it. It's just a recommendation. There is no magic time frame difference, but I agree there is a time frame difference between daily and the 1 minute versus daily in the 1 hour or daily in the 30 minute. But I tell people to focus on one time frame sequence if you are going to trade multiple time frame analysis because 9 times out of 10 they come back to me and they're like, "Oh, this is really confusing. I got like 10 different time frames. What do I do?" It's like stick to one time frame sequence. Use the daily, use the 30 minute, use the 4 hour, use the 5 minute or 15 minute. Stop looking at weekly 4 hour, monthly, daily, 1 minute single time frame analysis, 1 hour, 5 minute. Like stop with all that. Just focus in on one set of time frames. Like that's my number one tip. Go back to basics. Number 6, he goes on to say, have you ever considered trading V10, V75, boom and crash? I have no idea what that is. I don't know. So let's go on to the trade reviews. So I can give you feedback. I'm not going to go off and change anything or tell you what to do. I can just give you feedback of what I would personally do and what I look out for. So that's what I can do for these trade reviews. So let's get into it. First trade, US 100. Can I blow this up? Yeah. Okay. I'm not a big fan. I agree with your trend line. It did remove this poor quality area, and sure, you could draw this upward momentum like that, but I don't see an imbalance. This is one of the videos that I created. Let me scroll out. I uploaded it a couple videos ago talking about imbalance, right? And then another one, arrival. Those are my two biggest tips, right? I don't really see an imbalance here, so it's not something that I would really trade. Okay. I like this, I actually was looking at buying this as a trade. I think this was today, if I recall. There was a drop based rally down here, but I didn't like it on a lower time frame. I tried maybe looking at the 5 minute as an entry. I agree with this momentum that you have right here. I really like the imbalance that came from this demand zone down in here, right? But we didn't break the downward momentum. I always like to have a full candlestick, open, high, low, close like that, as well as remove the supply. We removed the supply, but we didn't get the candlestick break, right? If we did get that, then I would have totally loved this trading opportunity, right? And what I would do is, let me redraw this, is I would take the bottom 50% because that's really where the imbalance started from. That's a very wide base, right? And when I see this, the buyers really started to take control down here at the bottom, right? They didn't take control here. They took control really down in this general area. So I would personally look to take the bottom 50% of the zone, increase my reward to risk, or go down to a 1 minute and see if I can tighten up to a 1 minute drop base rally. That's usually what I'll do. But in this case, I didn't really like it. Like I said, it's too wide of a base. Price came down, tested it, rallied up, dropped. So I was a little unsure about this. Then my profit margin was getting cut, so I didn't want to end up taking it. The next trade, US 500, the US 100. Lower low, lower high, removing this area. We don't really get a good momentum break. Like that carries on there, so we never really break the downward momentum. Same thing, I always require this. Like that's always my trading setup, right? Same thing, what I'm going to say here is notice the imbalance. You could call the start of the imbalance here, or you could start the imbalance here, right? This is really where sellers took control. One of the two, right? It's not a very good imbalance. What do I always say? I want to see price go at least 2 to 1, at least 2 to 1. I want to see candlesticks like this, like not even like that. I want to see candlesticks like this. Very strong moves like this buying candlestick right here. I want to see that type of price action. Very strong buyers coming in, right? I don't see that here. I bet you if we go down to a lower time frame, US 100, we're going to see something like this. Drop like that, right? Grinding up and then leg out. That's not something I like. If you go down to a lower time frame, you might be able to find the drop base rally down here, but like I said, it's probably going to look like this. Okay, so let me find it really quick and then I'll get back to you. Okay, we're here on the NASDAQ 5 minute time frame. Here is the trade that he took. I don't think it's horrible. I don't really see a momentum. You might have some type of momentum breaking, but ideally I'd want this candlestick being up here, right? And what I would want to see is this. That's what I want to see. I want to see a lot stronger move away. So like I said, that's your zone, but you could probably tighten it up like that, but it's still not probably going to be the greatest. I don't know. Let's see. Let's go down to the 1 minute. Yeah, right. So that's what I mean. It's slowly grinding up, grinding up, grinding up. If there was a serious imbalance between buyers or sellers, do you think price would leave in a very strong fashion or it would continue to grind up? No, it would leave in a very strong fashion, right? If there's a lot of buyers, you will see a big candlestick be printed like this, and then like this, and like that, right? That's what you want to see. I will show you an example. This was a trade that I was trying to get into. And keep in mind, these are just my tips. You do not have to follow them. Clearly, your trades have been working pretty well, so it's totally debatable. I'm just giving you little tips about things that could be better. This is a trade that I was looking at today on the UK 100. I really like the imbalance. This is what I was talking about. Very strong. Notice how the first two candlesticks, the leg outs, those are the most important leg outs. Price went over 3-1 within the first two leg outs. That's what I want to see, as well as it removed a very clear, obvious pivot point that made a higher high, higher low, as well as it removed the area down here as well, right? So very strong move to the downside. We removed multiple zones. Really nice tight basing up here. I really like that. Prices came up and it reversed. So I pulled my order. I'm not a big fan of how prices come so close and then reverse. So I pulled it. But even as prices continue to go up, I would be concerned of, this starting to be my new type of price action. These like this, right? You've kind of got this new stack of buyers coming in over here. So I don't like the profit margin anymore, but I really like the trade. Now I could see it working out for a 1-to-1, but it's personally not a trade that I would want to take because it's not enough profit margin, right? I don't want to have to battle out 1-to-1 trades just to make the money, right? Not for me. So let's continue. His next British pound daily time frame. So here he's trading multiple time frame analysis. He's starting with his daily time frame. I like his zone. I like it. It's good leg out. It's removed this area of demand and this area of demand. So I think it's totally fine to be looking for selling opportunities. Clearly, he's also trading below the 200 moving average as well, and he's reacting off of it. So I think that's an extra confluence as well. He's below the 200 moving average. He's reacting off of the 200 moving average. He's reacting off of supply. So he's building a story of why he's trying to get short, right? The example I like to give is, those old-fashioned weights. You know what I mean? And the more weight you add to this side, right, the scale starts going down. I'm thinking of scale, right? So he's building a case of why prices are going to go down rather than up, right? And so he's stacking all these things in his favor. Prices below the 200 moving average, prices reacting off of the 200 moving average, prices are reacting off of higher time frame supply. Hey, I want to be looking for selling opportunities. I agree. That's pretty good analysis, not going to lie. His lower time frame is the 1 hour. Euro pound 1 hour. Higher high, higher low, higher high, higher low. I like the momentum break. I like all that. I like his base. I think it's good. I can't see this really well. Euro pound. Let me just go into this. Oh, this is the same trade I took. I took the 4 hour short. Oh yeah. I'm not sure if I told you guys about this one. Yeah. I took the 4 hour zone. Let me pull up my trade review. Okay, quick check. I haven't posted that trade review yet. I guess I forgot. Yeah, I can't believe I forgot to actually post this one. We talked about it in the watch list as well as the Sunday meeting. I know for a fact I posted. Why can't? It was only a couple days ago. I can't believe I forgot to journal that. Yeah, I really like this one. Yeah, I still have it journaled. I still got to do that, but I still have it on my charts. This has been one of my favorite charts, just because I don't know. I like the story of this. It's like overall down, then we started breaking this downward channel, higher highs, higher lows. I liked this area for buys previously, right? That ended up holding for a couple days, then ended up breaking, and then dropped down into the demand down here. And so since then, this has been in the range. We got supply up here, demand down here. Yeah, I really like it. I didn't know it was actually reacting off of the 200 moving average as well. I'll journal it. Yeah, I like that. I took this on the 4 hour. Yeah, 4 hour. It's my classic higher high, higher low setup, removing those opposing pivot point zones, breaking momentum. Yeah, it's great. S&P 500. So yeah, I don't think there's too many things wrong with that one. This one, oh, quick note. What I'm going to talk about on this trade is you're taking the exact same trade, man. This is the US 100 and this is the US 500. It's the exact same sell setup. Both zones were created at the exact same time. I don't recommend going off and trading both setups. If you decide to do that, split the risk. So if you decide to risk 1% total, do 0.5% on here and 0.5% over here. That's personally what I recommend, because it sucks when you get the same setup and you go off and trade them all and you lose them all and you blow your account pretty quickly, or you do some serious damage to your account, right? So when I see this, when I see the exact same setup, I'll show you an example. What I do is I like to go through with a set of criteria. One being like, hey, if I see the exact same setup on S&P, NASDAQ, and US 30, as well as the German and the 100, they're all showing the exact same setup. I know personally which ones I trade best. Like the NASDAQ, I trade really well. So I would prefer trading the NASDAQ, right? But if it doesn't look good on the NASDAQ, I won't take it. So my first criteria is, how does it look? Does it look better on another pair? You know? It's like if you go to the club, if you got two girls walking up to you, you got two twins walking up to you. One's really good looking and one's, just decent looking. Which one are you going to go for first? The good looking one, right? That's going to be your preference, right? And these are basically twin sisters. So you got to pick which one you like, right? I could go into a lot more detail on that, but we'll leave it like that. So I like to determine just based off of the structure, the quality of the setup by scoring it. That's my number one thing that I do first. And then I'll decide secondly, like, which setup I should take. Historically, I trade this one better, so maybe I should lean towards that, right? But if we look at the pound yen on the daily time frame, you're going to see this exact same setup. Look, pound yen, euro yen, right? It's all the exact same, right? So CAD yen as well. It's all the exact same, but I'm not going to take the damn trade on CAD yen, right? Compare that to that one, right? At least on this one, all this demand was removed. The leg outs were a lot cleaner. So I would prefer trading Aussie yen, right? Same with like pound yen. It's good. I think it's still pretty good. You got really good imbalance on this one, right? But versus, say, euro yen, I would rather trade pound yen. You know what I mean? Another thing I could talk about is when you see the exact setup on three different charts. If you notice one comes back and it's already blown through the zone and the other two haven't come back, or the one that you're trying to trade hasn't come back into your entry yet, there's a higher chance that that zone will also be broken as well. I don't know the exact stats behind it, but I just don't think it's good when you have the exact setup on three different charts and then they all blow completely right through it, or two of them blow right through and then you're still waiting for the pullback on the other one. To me, it just raises red flags, right? But how I determine it is I score them out just based on quality. I use that as my number one thing. And then I look at historically what I do better. And then number three is, have the zones already been removed on the other pairs, That's what I do. So yeah, I think that was all your questions, trade reviews questions and stuff like that. I wish we could actually sit down and have this conversation, because then we could go back and forth with these questions and answers, give you tips, because this is what I do is with people in the private group. I'll sit down with them after 60, 90 days and I'll review all their trades, 20, 30 trades, their last trades. And I get them to do a little exercise saying, hey, what setup is making you the money? What do you notice about your winners and losers? Do this report, come back to me, and then we're going to sit down for 5 minutes and then I'll tell you what to do going forward. So I wish we could have that conversation. I think you have a good idea. What I would recommend is, honing down, honing in, whatever you want to call it, into a quality setup, because you are trading the same setup on different pairs. Some of these are really good top-down analysis trade reviews, in my opinion. Keep in mind, this is just my opinion. Don't go off and change everything. Just do whatever you want to do. It's up to you. Want to take this advice. This is for everybody listening to this. But it's just little things that I've noticed through 7 years of trading this methodology. So I think I have some type of valid opinion when it comes to this type of stuff, right? But really focusing on quality and balances, and that's what I would tell you to do. Is if you have the exact setup, documented 30 trades, go through them all and figure out like, hey, is this a really good imbalance? What's the arrival? There's so many things that you could do. I just can't get into it because you're not in this call right now. So if you guys would like to do this with me, I can go into more detail on some other stuff. So if you guys would like to do this, you guys can always reach out to me on social media at Moneyball Austin, saying, hey, I'd like to do this. I'll pick one of you guys. I obviously can't sit down with all of you, so I'll have a little criteria, making sure you got good Wi-Fi, good mic, and you can at least speak English, right? So if that would like to be you, you can reach out to me and I'll pick one of you guys. If you guys really did enjoy this video, comment, like, subscribe. What was your favorite part? If you guys have any questions about this, you can hit them down below in the comment section, okay? Trying to give you guys as much value as I can when it comes to this type of stuff. And if you guys want more on this trading methodology, head over to my YouTube channel, check out the tips playlist, and you can see course 1, course 2, course 3 on the supply and demand methodology, as well as so much more in the tips playlist. So I'll see you guys later. Thank you guys so much. Bye-bye.